Hey folks, over the past few days I've received more than a fair share of emails regarding the technology sector, the pullback we've seen here in the early December period, and what we should do. Well, let me show you guys the three most important charts as far as technology is concerned. Let me just, first of all, before we look at the charts, make one important point. What we tend to see into year end from a US equities perspective is that underperforming fund managers, which usually tends to be a lot of mutual funds, are underperforming the market. They are going to have to keep the bid, maybe buy or at least not sell some of the best performing stocks into year end, window dressing and those kind of things. This year again, technology stocks, the XLK, the QQQ ETF, the FANG stocks, they've acted very well. So it's from that perspective, tactically difficult to imagine that we'll see a real faltering of this sector into year end. In fact, I think there'll be another buying opportunity. Let me show you three charts. Number one is the Nasdaq 100. What we've seen here, and again, we're just going to show you guys this through a 12, 18-month lens. We've got a very simple support line. I say the simpler the better for perspective, and you can see we are basically thus far simply mean reverting from the upper end of that range. In fact, in the clubhouse, I showed people a chart 27th of November, and I discussed in real time with my members Nasdaq 100 has likely reached the upper end of its range, and it's most likely needing to pause here and maybe even pull back for some period. That's gone over very, very well, and we've been positioning well for that. So right now, all we're seeing is a mean reversion move. You can do the same thing if you look at the XLK, which is an ETF that represents the technology sector of the S&P 500. Same here. People are freaking out after 3.5–4% pullback. All we're doing, folks, so far is mean reverting. Of course, every move for the medium and long term starts somewhere in the near term, but I think right now, if we keep that perspective, we would be wise to respect that so far this is simply a mean reversion move. Now, obviously, I don't think, and I would never advocate that one buys this kind of stuff without first seeing some sort of a bullish reversal, but we're starting to see some of that setting up. Now, let me show you probably what I consider to be the most important chart in all of this, and that's the XLK. Again, that's the S&P 500 technology sector, and we divide that by the S&P 500, the SPY itself. And this is what that looks. This is a relative chart, okay? And you can see is that since for the past 12 months, we've so far had three, and we're now doing the third pullback, and they're each about 4.5% deep. We saw one here in late 2016, then we saw one in June into July of this year, and we're seeing one again right now. They're all coming back, or they have all so far come back to technical support from a trending perspective, the lower end of this range. And again, also in percentage terms, they're working quite well. Now, obviously, again, there is always that threat that this leads to a bigger faltering, but I think into year end right now, there's good odds of that we're going to see a better buying opportunity once again. One single name stock, and I'm going to give you a bit of a bonus here, one single name stock that I like particularly within these dynamics is Facebook. If you look at Facebook here, even just looking at the year-to-date chart, I still think that stock is, through a multi-quarter lens, probably overbought. But looking at it this way, you can see all we're doing is coming back to a support area, a 100-day moving average that I do think ultimately will give us a better buying opportunity. But again, the key thing is to look for a reversal. I've got what's called the B2 reversal indicator that we're going to look, along with clubhouse members, for bullish reversals once they take hold. We're not yet there, but we're very close to that taking place. Along the same lines, we have to understand and respect that past few days of pullback in technology land, or the past even week and a half or so, 2 weeks, has resulted in the tech sector, the XLK, on our short-term, medium-term, and long-term bull-bear trend measurement algorithm scanner, which is available if you want that. We've gone to near-term neutral. So we're now waiting for this to go back to near-term bullish, along with a B2 reversal. Again, very much the process that we like to operate by. Once that signals, we're going to be likely buying this again for a move into year-end. I hope this was helpful, folks, and I'll see you in the next video.